welcome, guys. This is the third episode of Chasing the Bag pod with Buddy and B.
And Femi.
Yeah. Now we have a special guest on the pod, Femi Rex. Yeah. So Femi, introduce yourself to the listeners, and we can take it away from there.
Okay. I'm privileged to be Chasing the Bag with my guys B and Buddy. My name is Femi Rex. I work as a debt banker with the Standard Bank Group. So I mean, if you have any debt issues, you can come and meet me. I can help you do one or two for it. As long as it's not Lapo you're owing, I can't help you Lapo. But yeah, I mean, nice to be here. I'm very interested in talking about how we can all chase the bag together and get our people up, our bag up.
Yes, yes, makes sense. Yeah, so
very, very welcome to the podcast, Femi.
So yeah, B, what are we talking about today on the pod?
So actually, I think we dropped the second episode of the podcast about, I know, well over a month now, and due to work, some personal developments in our lives, and major moves. So we've not been able to get together to record. Yeah, so we actually recorded an episode 3 before. For some reason, the audio was terrible. So I think we're just revisiting that topic that we had recorded, which is the upcoming recession. Like, what is the recession? Thank God we have Femi here. Femi is a banker, so he can shed more lights, more insights than we had the last time.
Yes.
Okay. So like, what's the recession? What we think people should do and what we'll be doing, while the recession is coming. It seems inevitable at the moment. I know that the United States had the first quarter where they got a negative. So if we have another one, we're in a recession. But I'll let Femi take it from there.
I think they've actually had that second quarter.
I think they've had the second quarter,
but they had the back-to-back, but they're still very much in denial. I mean, they have every right to be anyway. I think they released their employment stats. I can't remember. I think last week.
Okay.
So I mean, it makes a lot of sense why they are against that. I mean, yes, the technical definition of recession, where you have to have your growth rate per quarter needs to go down twice for you to technically be in a recession. But their employment stats seem to have beat expectations quite massively. I think they added almost about, if I'm not mistaken, about 200K plus jobs from what they were expecting. So I mean, if you add those numbers in jobs in an economy that's supposed to be in recession, obviously you can see why they are very much that they are not yet in recession. Let's look at what Q3 holds in terms of growth rate, and then maybe we can finally say, okay, you guys don't be in denial. You're already in recession. Whether your economy is adding jobs, but that is just doing for your growth at the end of the day. So yeah.
And another thing is the quality of jobs that you're adding. So like, What kind of jobs are you adding? Is it high income jobs?
Mm-hmm.
What
is it, jobs where they are producing and adding towards the, I guess, overall GDP of the economy, such a way that the economy grows? Or is it just menial jobs that, yes, you can record as growth, but they're not really adding anything to the overall economy at all?
Yeah. Another thing that they should even consider is that most people, like most Americans, are out of jobs because they don't even want to get jobs. So like most of the after COVID, a lot of people just decided to stay back home. They've been giving them handouts, so that has kind of inflated their job numbers. So
it must be nice to have handouts.
they are giving you $1,000 per month just to stay at home. Why would you want to go out and get jobs? But
exactly,
I think they cut back on those freebies now, though. So the true picture might start coming out more clearly than before. And the next quarter will actually tell us if they actually, because a third quarter you can't hide that. Maybe the first two might have been flukes, but the third will show. And also their inflation rate has gone up. I think it's over 9.2. The last time I checked that, the Fed chairman came out, I think he increased by 0.5 to 9.2. I don't know if the last meeting they increased it again, but yeah. So for viewers, what we mean by inflation, all this economic mumbo jumbo, is just simply put, every nation has productivity, and that's like what goes into the economy. Like, what are they producing? How are they adding to the nation and the world at large? So there are a lot of things that go into it. And if there is a decline in that productivity, let's say, oh, I'm going to be producing so and so amount of, let's say, oil, like Nigeria, and our production of oil reduces, it means that the value that our giving is reduced. So that can affect the GDP. If that has reduced for 2 consecutive quarters, it is technically defined as a recession. Everyone is like confused or not so sure. Are we in a recession? Are we going to the recession? When will it start? And what should we do as like average Joes, like to prepare ourselves for it? And what should we do during a period like that? And that's what myself, Femi, and B will be speaking on today. So, B, what do you think we should do in a recession? Like, what should they expect and what should we do? Like, what we'll be doing is that we'll just speak around generally to it, then specifically to what we will be doing, like in our personal lives to prepare and make ourselves ready.
Okay, so the recession is supposed to be a tough time, but it's going to be a tough time in the world. I think once it has become a reality with America, it has become a reality with the world. Right, because the reserve currency is in dollars. Yeah. So if it's in trouble, everybody's in trouble basically. So do you think, does the recession have because one thing that we are seeing is inflation with prices of goods and what's not here, right? So the recession has impact on that. So that's one of the symptoms of the recession, can I say?
Yes.
Right,
yeah.
Femi?
Yes, no, correct. We have by all means.
So it is a recession, and people people tend to play their cards close to their chests, really. And we've seen it in the investing space, in the VC space, where investments in new companies or in seed investments and companies raising funds are experiencing trouble raising funds, basically, because investors are playing their card more close to their chest. And even with the crypto, whenever somebody hears crypto, his heart just drops because
that one.
My guy was at the receiving end of that.
Don't worry, hold the bag.
Hold
to the end.
We're holding
to the end.
So yeah, we of course generally affects everyone. There's like the prices of, like B said, inflation is high, especially in Nigeria. In the US, they're complaining that inflation is 9 point something. In Nigeria, we have it as high as 18, if I'm not wrong. And we see it in our day-to-day. So the price of bread now, last time I was in Lagos, it's about 500 to 700 naira for a loaf of bread. Those standard sizes. Everything, if you go to the market, everything has like almost doubled in prices. So a lot of time, people are during recessions, people are banking on their savings, to fund many of their lifestyle. People get out of jobs. Hopefully, that does not become really bad. So we need to the stages we go through during that time will determine how we react it. For me, there's the spending, there's investing, there's saving, and there's just general lifestyle adjustments that you make during this type of situation. For investment, I know a lot of people will be holding their cash to their chest. Like B said, a lot of VC investors are not investing. I personally know a very, very good startup in Nigeria who has raised like seed and want to raise their Series A, who had like their lead investor from the US back out. And when that happened, like every other person who was, wanting to invest as co-investors in that deal did not. So they are in limbo now. They don't know what to do about like that situation. Also, for you, if it depends on where you are on the investment spectrum, are you a newbie? Like most of us that are listening to this show are retail investors, and I can tell you free, this is the best time to buy in value add investment. So if you have a company that you really trust their fundamentals, you get the lowest prices for things now. Like Warren Buffett said, I am buying now. He's buying now. Like everything is going down on his investments. The guy has drive gunpowder. So of course I understand that the first instinct that most people have is to fear. But that's the thing. It's when others are fearful that you should be reasonably confident. Like you have to, of course, you don't just blindly invest and just suspend disbelief, like I said in previous episodes. So you look to those companies that you feel like, oh, these companies will still last. What's happening now is fear, is fraud in the market, like crypto people will say, fear, uncertainty, and doubt. So you take advantage of that situation in investing. Femi, what do you think? Like, how are you going, guys? I know Femi, you are very risk averse as well. What are you guys going to do? Me, if I see very good companies, I am still down to putting down my money. If I see equities, if I have extra money now, I plan to buy. This is just free. I plan to buy Zoom because I feel like they are doing good stuff. So this is not financial advice, like we say, we're not financial advice here, but I'm just telling you, like, personally, what the stocks I'm considering Zoom. Which other one? I think Zoom is very, very strong. And also the major ones like we discussed.
The ETFs, right? The big
Microsoft.
The fund, right?
Yes, the Facebooks. Like those companies are here.
Fang anymore.
Is that which one? It's Fang now.
Both.
I mean, but you spoke on very good point. I'm going to touch on one thing B says, tough time never lasts as Nigerians.
Exactly.
Tough time never lasts. What's that meme? I've forgotten.
Is that man now?
I've forgotten the remaining parts. Tough times never last, but something. But anyway, that's by the way. So I mean, like Bale said, I mean, well, at the end of the day, people that have money that are not risk averse, people like us that don't have money, that we just are managing our lives. We have to be risk averse before they take the small that we are managing.
I understand. I guess.
Yes, but I mean, to Barry's point, you can the whole idea. So let's look at it from a technical standpoint. So the U.S. Fed, CBN, MFL, everybody is increasing rates because inflation is going out of hand. I don't know how MFL is going to affect Nigeria's market share, because it's a little too late to be doing that. But in terms of the Fed market, it's trying to say, okay, let's increase this rate. If we increase rates, banks will increase savings rates, banks will increase checking accounts or whatever, how they do it, in the sense that you can save more. If you save, the interest on your savings will go up. People that want to borrow will borrow at very high interest rates. So it will sort of reduce the impulse to borrow for consumer stuff, as opposed to things that will bring in more money to business or to even you as an individual. So the whole idea is to say, let's pause on how much people are spending in the market, which is why they are increasing the rates to sort of do that for the entire market. And once that has sort of reduced again, they'll start cutting rates back down, sort of spur consumption again in the economy. I mean, at the end of the day, it's all, I don't want to say it's all mathematics and just looking at the numbers. How am I going to reduce here to increase here, and all those, I guess, financial wonderful things. And just to what Barry was talking about in terms of the markets and in terms of maximizing all the fear and hullabaloo in the markets, is, as Warren has said, is when people are fearful that you should carry the money that you have and just go and chuck it in one thing that you expect to go up. Because if you look at everything that's happened this year, literally you can make I don't want to say you can make a killing, but you can at least make a 50% upside on your money when the markets bounce back on almost any good stock. I don't have specifics because I mean I don't have the money to do all those things, but taking as an example of Zoom, even Zoom has cut down on its all-time high a lot this year. The big boys, Microsoft, Netflix has lost like about 75% of its value. Google has lost a lot. Microsoft. So just looking at those names, even the names that you're more familiar with, if I believe you can invest, if you have $1,000 and just put it there, the potential for that $1,000 to become 1,500 when the market's set and everybody's now pumping money again it's very high. Now, when if you do that, as we say, we don't know, because we don't know. We're not God. We don't know when when this will happen. But in my opinion, the odds of losing your money in a good stock at this point in time as opposed to gaining is very low. Again, it's not financial advice, so please, I beg, before you look for me and come and say it's my organization that gave you advice. Not
Exactly.
I beg. I'm still looking for my daily 2K. But yeah, I mean, to all those points, I think another way, if you are fearful, or by all means, but there's piggy vest, there's rise vest that sort of still give some sort of percentage on your earnings. There are a number of people that you can save your money with that sort of help you sort of walk on water more or less in this very turbulent period. But yeah, I mean, B and Buddy can probably speak to more as they're bigger men than I am.
Please,
also, don't mind you. This man.
But if I can say something, right? If there is, I don't know if you can call it a silver lining to the whole recession thing, right? Is that it has separated the, how do they say, is it the wheat from the shaft, or how do they say it, right?
Yes,
when it comes
exactly.
to
people are riding the cash wave.
Riding the bull valuation wave.
Mm-hmm. So you have companies that are providing solutions to invisible problems, or things they're like a solution looking for a problem, right? They are basically and they've positioned themselves so nicely that they've raised millions of dollars in seed funding or Series B funding and what's not, as it is. Crazy amounts of money. Yeah. But with this sort of correction that we've experienced this year, same thing with the crypto markets too. So we have like shit coins that were disguised as
some of them they were not shit coins like that, but
yeah.
So when your owner is proud and the people that are giving money are ready to make a fool about his pride, that's what happens to your.
And if terror happens.
Exactly. That's literally what happens. And the owners of the money were just like, wait, it's not us that's giving you the money. I mean, how are you doing all this?
I beg.
Yeah.
So basically, right? So I think it is the businesses or coins or whatnot that were built on solid foundations, they're going to last this period. So I don't see like Apple losing 70% of its value like Netflix. Netflix really experienced a boom because of the COVID lockdown and whatnot, where people were indoors for extended period. Mm-hmm. Same thing with Zoom, right? So of course there is possibility of this just being like a minor correction and them coming back and riding the bull wave when it comes back, like Biden said. But there are some that are never going to recover, obviously, because they were all fugazi to start with.
Yeah, they were. So like for retail guys, just like we're all retail guys, not as if we have hundreds of thousands of dollars to spare to invest. So my advice, especially if you're in Nigeria, because most of our listeners are in Nigerian market, I know that there's a lot of concern about the exchange rates between Naira and the dollar. That's one major concern. But you need to, if you're trying to preserve the value of your money, you might be better off investing in assets that are pegged at, let's say, the dollar or other currencies. That's one way you can hedge against that risk. And for this period, you just need to keep only your essential needs. So your essential needs that you want to, that money that you need for your essential needs in cash and cash equivalents. So because anything that is currently in cash is losing value on both ends, losing value on the exchange rate part, on inflation part. So you just need to only have like your spend money, like we would say, money that you want to use to do things. The rest, I would even say that even your spending money, put it inside investments, high yield savings investments, like maybe PiggyVest, Cowrywise, Overwood. There are a number of them. And if you want to like invest in stocks or other instruments that are not pegged in your local currency, you can look to companies like Bamboo, Chaka, Passfolio. At least that's what I'm doing. So you can start with that basic. You don't need to even stock pick. You can buy an index. I think we talked about this last time. Just buy a broad-based market index that has like the S&P 500. That has like different top 500 companies there. So you don't have to like think. If you don't want to think too much, just open a Bamboo account, open a Chaka account, open Passfolio, open Trove. Like these are guys that are they're like brokers for people that are not living in the US or not living where these companies are actually existing or providing service. So you can tap into those industries just by that. Then you can do some high yield savings. Also, this is not the time for you to be lending out money to people who you know will not pay back. I think you have to be very wise with your money in this period. Like, you have to be very wise. And also, I think B and I discussed this as well. This is the time when you will be seeing so many things that are too good to be true.
Run. Oh yes.
Run. Check give it exactly. Want to collect it. Collect it with one eye open, sha.
Don't be going to all these investments that are promising you more than what like the current interest rates are saying. Because
I think I saw something that was like
let me give I guess audience the best way to think about this investment thing, and people that always come with 20% per month, whatever they are doing, I don't know, sure. But I guess how you need to look at it is look at exactly what the government yield is doing. So I guess you can easily Google, say what treasury bill rates are.
Yeah.
If those investments are, I won't say double, but if they are double and all of them are promising per month, that's already too good to be true. Yeah. I think currently the treasury rates are at about, if I'm not mistaken, at 9% or 10% per year.
Can you explain what treasury rates are to our retail investors? What's that rate? What is it? Is it like the return on government borrowing?
Yes. So exactly. I mean, treasury bills or treasury bonds, whatever you want to call it, or government bonds are basically it's sort of the rate at which the government, which is Nigeria as a sovereign entity, borrows from individuals, companies in the market. So the government wants to do a project. They come to I guess bankers, corporate finance bankers, on the DCM, debt capital market side, and say, we want to raise this amount of money. Can you go to investors and say Nigerian government wants to raise, or even the state government sometimes wants to raise a particular amount, maybe 100 billion for a particular project, and they want to repay to investors over 5-10 years. T-bills is more or less like recurring one. It's the shorter tenured one, but the government bonds are the longer ones. But it's basically the rate at which government itself is borrowing. So if your government is borrowing at, say, 9%, and for example, Dangote, which is the highest performing company in your country, is also doing his bonds at, obviously higher than the government at, say, 12%. The odds of somebody investing in that country doing, 20% is still very feasible in a year, but if they're promising you 20% a month, that is roughly, 2,400. Because my math's terrible. Or 240%, sorry, in a year. If my maths is not wrong. That is, I don't even want to say, there's nothing sort of ridiculous is never enough to explain what that is, because it's mind blowing. Exactly. Yeah, so you need to look at it and look at so in as much as obviously at this point we're very indexed on what can I get on my money, you need to also sort of scrutinize what is this person investing in that can bring even 20% a year in Nigeria at this point is something to question people about. Because what are they doing that's getting that? So you need to just do a bit more in just asking, how are you getting this 20%? What exactly are you doing that, for example, the guys that are giving money to Dangote don't know how to do?
Exactly.
You get that the guys that are putting money in Dangote, that are putting money in government bonds are doing that you think they would that you think you wouldn't know, or that they cannot do, or they don't have access to capital to do it. Exactly. That's just how you just think about it before you just dash your money to someone that will just. That's also trying to do. He's trying to do crypto futures and happy cash out his own money and run away. But you just have to think about it.
Yeah, perfect.
Don't dash money.
Yeah, so Femi like rightly summed it up. So you'll be thinking like, if someone feels better, feels more comfortable with their millions of dollars to give to Dangote, to give to the government of Nigeria and collect 9% back and collect 12% from a Dangote, the richest man in Africa, a very much more de-risked investment, because of course, if you are not investing in him, you are investing in his business, and that is a corporate entity. It's much more de-risked. It has like assets that you can go after if they don't bring, but like lots and lots of assets that you can go after. If people with so much more money are comfortable with getting that little returns, even though it's not little, because for them to be putting it in, it is enough for them. What will any other investment, agro investment, be able to do? Why don't those guys, instead of giving their money to Dangote and Nigeria, why don't they give it to the agro investment you want to put in that is giving you 15% per month? So that's how you should look at it, and you just run. You know that this is not sustainable. Like even the high yield guys that are doing very well, like I can vouch for PiggyVest. I think their safe lock has reduced greatly. Maybe it's like 11% now, something like that.
Per year, not per month.
Per year.
That is even good. Like that is debt doing well.
Exactly. So you think about all these things. So don't lose money in this time. This is not a time like you want to lose money. This is time that you want to adequately allocate your capital.
I mean, at the end of the just to not be insensitive to the time, we know that it's not everybody that can, I guess, save and invest.
Money.
Obviously.
True.
Because to invest, to even save, first of all, you need to be earning enough to be able to save.
Yeah.
And then before you then invest, you need to be sure that this money is not going anywhere when you invest it.
Exactly.
I mean, there's all those dynamics, and this is sort of like the worst period to be taking a risk on people that want to swindle you for your money. So how I like to think about savings. I mean, obviously, the more you have, the more you can save. But I don't say in my trenches days, because I still did trenches. But in the days where I was earning a lot lower, how I learned or how I try to do it is at least 10%. I just bring it out immediately the salary gets paid, and what's that thing? I open my eye for the rest of the months by always trying my best to save that 10%. Whether is to hustle, how I'm going to eat, whatever. It's just, it's hard because times are even a lot tougher again, which is one of all those things. But if you can at least do that 10%, I think it will go a long way. I mean, you won't know, because you'll be feeling the effects on the small money that you're collecting. But the more you do it, you realize that at least in some times of hardship, you have something to at least try and that would survive, that you can survive till that time something better comes. And hopefully,
definitely something to fall back on. I think that 10% point is very, very insightful and very apt, especially for us, low earners.
Be safe for
because
don't do that now. Us, just say for low earners.
On this call,
but not all low earners.
Let me not. so don't let me go into it, because on this call we know who is who. We know who is who.
Exactly. We know who is who.
We know who is who. So I think saving is a very important habit, right? That like you form over time. You shouldn't wait until you are making a lot, for you to start doing it. However little it might seem that you have it now, I think that's how I've built myself up over the past, I think I would say 4 years that I started working, right? So I know that every month, there's this little bits, portion of my salary that is going somewhere to go and rest. And being in Nigeria, and I'll still be in Nigeria for quite a bit, like you guys. So one thing that I used to do, I still do actually, is like, if you are not comfortable with any sort of investment scheme, one thing that you could do is, although it is crazy right now, it is the dollars, right? It is always going to be holding value for you as a Nigerian living in Nigeria. So that's another point. So I think this call has run for a bit. So one thing I'd like us to do before we end this episode is for us to go through what we will be doing and any advice for people. So I know that Buddy has started what he will be doing. So Buddy, let's start with you. All right, go ahead.
So like we said, I'm not in Nigeria anymore. I'm currently in the US. I went for my MBA program at the Yale School of Management. So I'll be
right.
Number one, that's like back to school, recruiting, stuff like that. And also I'll be and it's a time of self-development for me. You get, and that's something you can do very much in a recession. You get, so if let's say unfortunately, let's say you're out of a job like me, you can self-develop, take courses, just build yourself in areas where you know that once the market picks up, there will be there will be economic activity. So a lot of the firms that are they are reaching and freezing on hiring. So that's something that you can want to do, self-develop, and that's what I'll be doing on that front. Also, I will be looking at the market. So looking at where do I think when the market picks up will be very, very interesting and will pick up the fastest. And if you have money to put in, you can put in. If you have skills, you need to upskill yourself to be very relevant in that industry, you can do that. Then also, I'm not selling off anything right now because this is the worst time to sell off. You will just crystallize any loss that you've already made. I will wait back till everything levels up, and we get back to a decent state in the market. Then I will now I'll reconsider, because it's always good to reevaluate yourself and where you are. But I will not do that right now. When everything seems sane again, then if there are some certain assets that I hold that I need to sell off, I will sell them off at the amount or the value I bought them, because I'm not taking any loss. That's not how we roll here. So yeah, I think that's it for me. Self-development, introspection, just researching into the market and into industries that you think will do very well, and positioning yourself to take advantage of them and all. So that's it for me. And also, don't put money into stupid things. Like I don't even have money to put in stupid things, right? That's not going to be my problem.
All right, Buddy. Femi?
I mean, just like Buddy, I mean, he's basically covered everything you should be doing in times of recession, because at the end of the day, what you want to do is buy the time for when the economy picks up, so that you are positioned in such a way that you take the most of, you make the most of everything. I mean, if you remember in 2020 in COVID, where sort of economic activities went down, I mean, there are people making a killing from Zoom, people making a killing from Netflix.
Exactly.
So it's just to think. And I mean, you can apply it to everything. This whole investing and looking at stocks, whatever, to everything that you're trying to do. So if you are a recent graduate and just coming out looking for a job, you can take the time. I mean, obviously the certifications these days are more expensive, but you can take the time to learn, do some internships here and there. Companies that will pay you, please, except the brand is just worth it and you don't need the pay, please beg. To bide your time, do a bit more reading, do any development that you can do, so that when the economy in general picks up and people are looking for people, you're ready. It's not then you now start, I guess, preparing for it. Yeah, supremely positioned for things like that. Like Patty is doing, is going to school. I'm also looking to go to school. I mean, you can do that in terms of your self-development and learn. And learn all those things along the side. And in terms of, I guess, the money aspect, I mean, there's the self-development, and if you're currently working, obviously, what's that thing they say? If you're going to spend money, spend it on something that will still bring you money.
Exactly.
So if you're going to spend the money in
reduce
developing on your current job. Save as much money as you can if you can. I mean, and something that's not always is not always mentioned, because we're all trying to, I guess, at the end of the day, chase the bag, is go to your family, speak to family, because at the end of the day, if you chase the bag and there's nobody to spend the bag with, that one is also for you.
That's a good one. Spend time with your family.
Go to your family. People should just take them out if you can. Also tell them to save more money and listen to Chase the Bag pod. If you have time to but I mean, that's where I'll sort of keep it. And I mean, if you're looking for more national organizations to come to find, you can find them and just base your time with them. And in fact, you can start shooting your CV so that when they are ready, call you to them. Yeah. So yeah, that's my advice. So B can wrap us up.
Oh man, you guys, you're inspiring. You guys are on your way to school. Buddy's already in school, so I think one thing that I'll be doing is trying to find my way back to school as well. There's something that it's not like I've been putting it off, but it has been at the back of my mind. So I'm going to be very active in this next year to get myself back into a classroom. So that's one thing I'm working on. And another thing for me is I'm going to be deliberate about expanding my network. That is going out, meeting people. That is connecting on LinkedIn. Although I did my first LinkedIn post today. It felt weird, but
I saw that.
You have to start somewhere. You have to start somewhere. So that is something that is at the back of my mind as well. On the investing space, like Buddy said, if there's a good company, right? If there's a good company now, I think, I won't shy away from doing a good deal with them. Mm-hmm. That one is certain. And also I've not opened my Bamboo. I have the app on my phone. I've updated it a million times. I've not opened it, but I think tonight I'm going to open it, sir. Let me see how bad the damage is, right? Yeah. Let me see how bad the damage is. And I actually think it is not the worst time to buy a bit more if I wanted to do. So maybe that's another thing is learning about the investing space as well. Learning so that when the market is rallying back up, I can just, hang on to the green candlestick and
Yeah.
And I think that is it for us today with this episode of Chasing the Backboard, episode 3. Femi, anything from you, Buddy?
Yeah, just that, guys. Exactly. You guys, hold on. Listen to, just try to be optimistic. Everything is looking down in the world, but if you calm down yourself, you won't be able to thrive. So just be optimistic, look at the bright side and prepare. Fortune favors the prepared mind. So yeah, that's with us on this episode. You guys listen to us, follow us on all platforms, Chase the Backpod on Twitter, on Instagram, follow us on our personal pages, the BE, for BE, Mr. Ebadi and D. Ebadi for myself, on Instagram and Twitter, Femi Rex for Femi. Femi is our new pod member.
Yes, welcome, Femi.
Join us on another
Thank you for having me.
So thanks, guys.
So all right, guys. Thanks for listening to Chasing the Backboard with Buddy, B, and Femi.